Hey everyone, welcome back to Mark Loeffler Experience. We're going to be talking today about a vacation rental property I'm going to be buying in Alberta, in Canmore. We're going to kind of be going through a quick look at the numbers. Is this a good investment? Is this just a lifestyle thing? Which I'm hoping it's both, because I want to go out and use it and I want to make sure it's a good investment. So let's get into it. Here are a couple of the pictures. So this is a condo hotel unit in Canmore, Alberta. You can see that it's already set up like that. It is basically in a hotel rental pool right now, which, to be honest with you, I will probably take it out of that and I will probably do some work. I mean, I don't really love gray carpeting. The colors are a little dark, change some lighting. But I mean, how can you argue with this view? I mean, look at this view right here. That's why I'm going out there, is for the mountains, mountain biking, running, trail running, skiing. This is what I'm looking at out there. So I'm basically looking at a 3-bedroom, 2-bath property, which is kind of harder to find than you would think. Simple fact that there's only 2 zones in Canmore that you can rent out to short-term rentals. One being a hotel condo, the other one being in the tourist zone. So you are kind of limited to what you can buy. Saying that, there is stuff that comes up. So this property is listed for $775,000. As I said before, it's possibly going to go into multiple offers. Well, not possibly. It is going to go in multiple offers. I tried to buy it on Friday. Today, when I'm filming this is coming out Monday. But here we go. So anyways, that's what it is. So let's go ahead and Airbnb, who knew? Sorry, AirDNA has an Airbnb calculator. So basically I Googled short-term rental calculators and this came up. So basically all you do is you go ahead and you put the address in and it's going to analyze the property for me. Basically it's telling me the average daily rate for this property is $420, occupancy rate of 54%, annual revenue of $83,517. Now, in my research on this property, a similar unit, 3-bedroom, 2-bath unit, their gross yearly income was around $135,000. So I would tell you that this is probably a pretty conservative. But I mean, hey, I love to be conservative. If I can be conservative and run a 50% occupancy rate and get 70 or 80, I'm super happy with that, right? Like why would I not be happy with that? All right, let's pull up a property analyzer. So on the AirDNA thing, while we're waiting for this to load, I can literally go in and I can change the purchase price. It'll give me a cap rate. Kind of not looking for that, but basically what I can do is if I find this to be profitable and I want to get a couple of these out there, then I can do this and I get a mixture of 2-3 bedrooms, whatever that looks like. But I can basically go on and I can find the best return for my money on that using that AirDNA site, right? So let's go ahead. We'll put the purchase price in here. I don't know. It's listed for $775. Maybe I'll have to go $875. Because it is a condo hotel, I'm going to be putting 65% down, so $300,000. I probably won't get an inspection because, again, it's a condo hotel. So they do all the maintenance on it right now. Appraisal is probably going to cost me $1,500. I am going to probably put some money into this unit, probably about $15,000 when I buy it. So we'll do that. Financing costs, because, again, it is unique. Let's do a 1% financing fee on that and legal costs. Alberta, again, you guys have higher legal costs than we have here. All right. And again, you'll notice no land transfer tax, although I do have to pay GST on this purchase, I believe. But I'm going to buy it in a corporation that has a GST number, so it's pass through. So that's what we're going to do. Let's go back. Monthly gross rents, they're saying $83,517. So we will do equals 83,517 divided by 12. In this, all my utilities are covered. In the condo fees, we have taxes of $6,822. So our taxes are not much off what I was looking for a multi-unit property here in Ontario. Insurance is basically covered by the condo fees that I'm going to be paying, but I will have contents insurance, and because I'm renting it out, I'm sure it's probably going to be a little bit higher. So let's just call that $800. I don't know. I have to check that out. And again, because this is a short-term rental, the property management fee is 30% on there. Condo fees, we can't forget that. They're $1,400. But remember, they do include concierge, all the heating, all the utilities, basically everything to do with the property. And I'm going to run a 5% repairs and maintenance. And I don't need a vacancy allowance because, again, I've only calculated a 54% occupancy. I'm probably not going to get a 2.5% mortgage, so I'm looking at 3.5%. I probably will get a 30-year amortization. So I am basically looking at if I can get a 54% occupancy rate, I'm basically break even. This is my break even point. So, well, I mean, would you consider this a good investment? Do I consider it a good investment? I got to be honest with you, with the fees and everything. If you were managing this yourself, obviously you take out a 30% management fee and you take that out yourself. I mean, you're paying yourself that. And that's how a lot of people retire from in doing real estate, by doing short-term rentals, because it does cash flow. But again, it's very management intensive. Your cash flow would be $1,700 a month on something like that. Your cash on cash return is 4.5. But again, I'm not going to manage that. I mean, I could keep it in the rental pool and all that fun stuff. But again, not my style. Rather have somebody outside do it. And I think I could probably get I can get more people using it, and so my occupancy rate will be higher, right? I mean, you can play around with it. What if it's a 60% occupancy rate? You do all that, but basically, this is a lifestyle decision for me. This is kind of, I want to buy this so I can use it for a fair bit. Hopefully, I'm going to use it in off times. Like the most popular time is the summertime there. I don't need to go out there in the summertime. I really want to use it more for the off season, which is skiing, which totally shocked me. And just to have a place to go in the winter and something to call my own out there. You guys let me know if you guys are out in Canmore, if you guys have vacation rental properties. Let me know what you guys are seeing out there. Always interested. I just went through this super quick. Obviously, it's not a great return on investment if I'm trying to do this to be an investor. But at the end of the day, if I can buy a unit out there, and my only thing is my opportunity cost on my funds, so on my $330,000, it's the opportunity cost. And basically, I can break even on this property. And let's be honest, do we think over time it's going to be more expensive to rent these or less expensive, right? It's the same thing with cottages in Ontario or anywhere. Like the cottage rentals have gone through the roof because people are doing their staycations. Now, something like this is more of an international destination where people are going to, especially for a 3-bedroom condo, they're going to be flying in to ski at Banff, Lake Louise, Sunshine, these other places there. So I think once things open up again, I will get more money and more opportunity. But I'm basically going there, and I can play with this because the asking price is $775. So what if I did $850? What if I got it for $825? These don't matter too much, but if I can get a 30-year am, like I'm basically cash flowing $15 a month. So, it's just one of those things that this is how I look at stuff when I'm buying it. Especially this is more of a lifestyle decision for me, not an actual investment. Although I'll check back in after I bought it and after 6 months, how it's actually operating, how it's actually performing, and I'll let you guys know. All right, everyone, happy Monday. We'll catch you in the next one. Bye.